Hey, it's Jay Green, private lender, real estate investor, and real estate broker located in Whittier. Thanks for coming back to my channel. I've been doing a lot of research regarding the recent raise of interest rates and where the real estate market in California may be headed. Right now it's May. Recently, the Federal Reserve raised the federal discount rate up significantly. We were at almost zero for like the last couple of years, and that's what's kept mortgage interest rates, car loans, consumer debt incredibly low. As everybody knows, everything is super expensive. Gas, milk, food, materials, everything has gone up. We have had about an 8.5% increase in inflation since last year. That is the highest inflationary increase we've had in decades. In a healthy market, we're gonna be at about a 2% inflationary rate. That's a healthy market. You want a little bit of inflation, but you don't want really high inflation because prices and services and everything continue to go up. The Federal Reserve is now stepping in to try to reel in inflation. We had a lot of growth in the economy. You know, businesses have been doing well. Borrowers have been spending money. Consumer confidence has been really high. So basically what they're gonna do, the Federal Reserve, they're gonna continue to raise the interest rate. Their goal is to get the federal discount rate up to 3% by 2023. That's a huge increase. So you're gonna see mortgage interest rates and every other rate continue to increase through 2022. What does that do to national and California real estate values? Naturally, it has to impact real estate prices. Obviously, if you're buying a house or you're trying to refinance, now you're gonna have a higher interest rate. Right now, the 30-year fixed mortgage is right around 5.4%. Just this year, we've had over a 2% increase in the 30-year fixed mortgage. What that means is buyers that are buying right now, their payment that they're gonna have, their principal and interest, tax and insurance payment, is now significantly higher than what it was even a few months ago. The supply of California real estate is super low. Normally we have 3 to 5 months of available supply for a healthy market, meaning within the existing inventory of houses can be purchased within 3 to 5 months. Right now we have less than a month's supply of housing units. Right now we're at the lowest we've ever been historically for available housing. You're going to see an impact on housing prices. Some claim that we're gonna have a bubble burst. I don't think it's gonna happen this year. And the reason why is because of inventory. I don't think you're gonna see a huge run up this year in inventory. Sellers become a little reluctant on selling because now they've got to go try to buy another property, and they're paying higher rates. Also, higher taxes have been a consideration for sellers. If the Federal Reserve continues to raise the federal discount rate, it's going to impact the economy. It's going to impact businesses. It's going to impact consumers and households. You will see some slowdown and you will see layoffs in different industries, and then that's going to impact obviously households and their buying power and consumer confidence. It's going to be some interesting dynamics happening this year. I think that we're going to have a really hot summer. I'm selling some of my properties and talking to a lot of realtors, talking to a lot of industry professionals, mortgage lenders, appraisers, investors, and we need to know where the market's going because we are acquiring real estate and we're selling real estate, we're investing in real estate, we're lending private money on real estate, and we need to know where the market's going. We need to make business decisions, and there's still a lot of buyers. Even though a lot of buyers have exited the market because of the increased rates and mortgage applications have dropped significantly, there's still a ton of buyers. I'm talking to a lot of realtors that are still getting lots of offers on their properties right now. Information comes out so quickly And so things change day to day. It happens relatively quickly. The war going on with Russia and Ukraine, that is having a lot of impact on economies and supply issues and other factors that impact economics. Just our psyche and how people feel about the world and their safety and where things are going. This year, I think California real estate is going to be still a hot market through the summer. And as interest rates go up, I think that's going to be impacting businesses and consumers and buyers. But I don't think this year you're not going to see a huge increase in inventories. I've been researching foreclosures and I've talked to a lot of people, and I just don't know where that inventory is going to be coming from. Now, you do have moratoriums that are being lifted on foreclosures, and there are going to be like rental moratoriums being removed, which will allow owners to continue or start eviction processes. And see, like, I know there are foreclosures, but banks are working out like forbearance and repayment plans with homeowners. I'm just not convinced we're gonna have a huge increase inventory this year. Not to say that it's not gonna happen, but we have to wait until economic events occur and businesses are impacted. Hello, hi. Job losses and households and consumers and buyers are impacted. I could be wrong. I don't know everything. None of us have a crystal ball. I'm a little biased because I'm in the lending and real estate industry. I'm not a fool. I don't stick my head in the sand. Please let me know, like, comment below and tell me if I'm missing some considerations about the real estate market and where things really are headed. I know things are not the best. We have huge national debt that we've never had debt this high. The real estate markets of California, where this is a very, very unique market based on its climate and the demand for people to want to live in California. Our economy is very unique. So those factors are gonna have a positive impact on our local California real estate supply and demand. I'm researching a lot online and talking to a lot of professionals and trying to educate myself on what economic factors, where things are coming as far as supply, health of the stock market and the market, economic policies, and what the government is doing to stimulate or kind of kill the economy. There's a lot of factors going in that are impacting the real estate values in California, the confidence of consumers and buyers and sellers. I will continue to do my research regarding the market and where things are going, because I'm not unrealistic and I don't want to kid myself or try to have a slant. I want to be a doomsdayer. I watch a lot of videos and listen to people that just have these really outlandish opinions about things just, falling apart and the sky's falling. But I just want to be unbiased as I can and objective about facts and data and really what's going on and not what I want to happen. I appreciate you taking time to watch this video. Please subscribe to my channel and give me a thumbs up if you like this video. Also comment below, because I want to just get your take, maybe what you think is going to happen, and how the economy and raising rates are impacting your business or your livelihood or your particular industry that you're in. We all have biases, based on where we're at financially, our periods in our life, our health, our family situations. Those all impact our own individual perspective and experience and outlook. So thank you very much for taking time to watch the video, and I'll continue to just post information as I kind of collect it and put it together. And anyways, thanks for watching. Have a terrific Monday.